Welcome to The Healthy Advisor, a podcast from WealthManagement.com focused on advisors' personal well-being and healing. I'm Diana Britton, managing editor of WealthManagement.com, and in this podcast we explore some of the struggles and personal development issues facing advisors and financial services professionals, and how to get to a place of healing for mind, body, and spirit. Hello, and welcome to the latest episode of the Healthy Advisor podcast. And thanks for joining us. As you may know, this is the podcast focused on financial advisor health and well-being. And today's guest has a very interesting story to tell. His name is Mike Wunderli. He's a managing director at ECHELON Partners, an investment bank to the wealth management industry. Mike, thank you so much for being on the podcast.
Well, thank you very much, Diana. It's a pleasure to be here. I love the work that you do, and I'm honored to be a guest.
Yeah, I think we're honored today. I know you have a great story. So prior to becoming an investment banker, Mike was a wealth manager himself. In fact, he spent 12 years in the private wealth management division at Lehman Brothers, and then several years at UBS. But it was at Lehman during its downfall in 2008. And, most of us remember the events of 2008, 2009, and the macroeconomic impact that crisis had on this country. And, most advisors were, of course, struggling to navigate those turbulent times with their clients. But Mike was literally in the trenches. Mike told me that the Lehman bankruptcy had a profound impact on his life personally. And that's what we're going to talk about today. So when I was I think it was one of my first weeks as a reporter in the financial services space, Bear Stearns went under. And so to me, it was like, this is all very exciting, that was
yeah, what a welcome
the
to
whole
you.
crisis that unfolded. It was like, this is a very exciting thing. But, a lot of us obviously remember what happened. I think that we kind of forget how bad it was and how awful it was for a lot of the people, who were directly impacted. And so, I think that it's great that we're talking about this today. But Mike, I just want to back up a little bit. So tell us how you got into the industry in the first place.
Okay, well, yeah, it was an interesting story, I guess, for me, because I wasn't sure what career path I wanted to take. And I was a couple years out of undergrad and visiting a friend in New York who worked for a private equity firm, but he was kind of a Wall Street guy. And we just got talking about careers, and I was curious, about some of the things that he had seen in New York and in Wall Street. And he ended up telling me about this career called private wealth management. And I think it was kind of just coming around among the big investment banks to offer institutional-like services to high net worth families. And he told me about it. And here's this career that had a combination of sales and finance, kind of the interpersonal and the analytical. And I didn't even know it existed. And I just got super excited. Immediately, I thought, that's exactly what I wanted to do. I thought for a while, maybe I wanted to be a stockbroker or some sort of, investment person. But when I found out about this, it was this, kind of higher end, a little bit more analytical, but also, very interpersonal with very successful people. And I thought, so immediately, really right then, I said, that's what I want to do. I remember the day we were on the steps on the Columbia campus on the Upper West Side in New York. So I figured, well, how do I get into that? It's very, very difficult. I had a decent undergrad and I had a pretty good job, but it was probably more on the sales and management side. So I figured I had that experience, but I definitely needed the finance kind of analytical background and really the credibility to get into a job like that. And figured, I got to go get my MBA, which I planned on doing. But at that point I was like, I got to go get into the best MBA program I possibly can. and targeted Wharton at the top of the list for its, its reputation in finance. And so I basically dedicated the next, besides work and family and whatnot, but I had a very strong focus on figuring out a way to sneak into a school like Wharton, and my work paid off. I somehow managed to get in there, which was really exciting for me. And so I went with 100% with the idea of getting into the private wealth management industry and go into that business, which wasn't a common path for a lot of students at Wharton. Most people were thinking private equity, investment banking, or, marketing or whatnot. And, but, it was that type of program that could launch any career. It was the wine and dine times. This was in 2000, we're right at the top of the tech bubble. And so anyway, I was super excited to go in, and my fourth day of class was 9/11. And so that just changed everything. Recruiting completely dried up. And then, business school goes pretty quick. It's 2 years, and the recruiting starts, day one. It really does. And so this was, an absolute shock. People always go in with their ideas, but when you get there, the general feeling is, well, I'm going to just look at everything and then go into whatever I want to go into. So it actually, because I was probably one of the stupidest students among my classmates at Wharton, it actually was a scenario where it was very good that I was focused, because I was laser focused on this area, private wealth management, where not a lot of other students were. And because of that focus, it really allowed me to get in deep with the few employers that were still there, only hiring a few people. And I was really fortunate. I ended up getting multiple offers from most of the top investment banks at the time. So I went through that whole process, and I really was, this upstart Lehman Brothers was just really looked interesting to me. I knew I wanted to work out of the LA office, and the manager there was just a fantastic individual named Barclay Perry. And he, I just fell in love with his style and, his honesty, as opposed to what I saw at some of the other places. And so I signed on with Lehman Brothers just right out of business school. And that's how I got in. It was called the Private Investment Management. Actually, it was called Wealth and Asset Management at the time, but they didn't like the acronym of WHAM. It kind of sounded bad in the investment space, so they quickly changed it to Private Investment Management. So that's how I ended up there.
Yeah, I guess I didn't realize when I first talked to you. I guess I assumed that Lehman had a big retail business, but it was actually more very high touch, high net worth focused, right?
They had zero retail business at all.
Yeah.
In fact, this was their first soiree into the wealth management space, because they were very big on sales and trading and investment banking, real estate, and some of the other areas of the investment banks. At the time, those were the big divisions. Investment banking and sales and trading, the prop trading desks. Those were really the engines of the investment banks.
Yeah. So, just sort of a little bit of context, around what was happening in 2008. The 2008 financial crisis began with cheap credit and lax lending standards that fueled a housing bubble. And when that housing bubble burst, the banks were left holding trillions of dollars of worthless investments in subprime mortgages. The Great Recession that followed cost many their jobs, savings, and their homes. Bear Stearns, one of the biggest and most respected Wall Street firms that dated back to 1923, a long time, was heavily exposed to the mortgage-backed securities that turned toxic when the loans started to default. In March 2008, the firm collapsed and was acquired by JP Morgan Chase for pennies on the dollar. I had a friend that was at Bear, obviously went over to JP Morgan, and Lehman would be the next big financial institution to fall. So Mike, take us back to those days, as hard as it is to sort of drum up that time. What were things like inside Lehman? in the months leading up to the bankruptcy. And you guys loved Lehman. Everyone, it sounded like most folks were very loyal to the firm.
Yeah, I mean, it was true that there was a culture that was deep down in everyone's soul, really, that worked there, at least in the Los Angeles office. I mean, we got a chance to interact with the other offices, and you felt it's some in New York, but there's a little bit different culture there. But we had, we were a family. I mean, no one locked up their stuff or tried to hide what they were doing. We collaborated. We were close, and we all really believed in what was going on. We liked being in a more of a meritocracy, and we had great access to all levels of the firm, and everyone was really helpful across the firm at all the desks. So there was plenty of success to go around. There was a culture of treating your client, putting the client first. And I mean, I'll give a lot of credit to Barclay Perry, who managed that office from 0 to 12 billion in just a few years. And he said, he always said, put your client first, put the client first, the firm second, and yourself third, and everything will work out for you. You'll do better than you could ever imagine. And he said, and always owe other people, and don't ever have, or always have other people owe you, and you don't owe anyone else. So always do more favors than you receive. And it was just a great philosophy that just kind of underlied the culture of the office, and everybody felt really good and close together. And like I said, we were a family, so we cared for each other, and it was incredibly tense, that whole lead up. I mean, he had a couple of years of it because the Bear Stearns thing was a big scare. I think it's important to remember at the time there were only 5 real, what you'd say bulge bracket investment banks, and it was Goldman Sachs, Morgan Stanley, Merrill Lynch, Lehman Brothers, and Bear Stearns, and in that order of size. So Bear Stearns was the smallest, and all of them were tied up in this stuff. Regulation hadn't caught up to the ingenuity of these products, and neither had the insurance firms that that insured these fixed income products, like the CDOs and the mortgage-backed securities. So when Bear Stearns happened, that was an eye opener to everybody, and that was a sign where maybe it was time to move on. But almost everybody stayed and really believed that things would work themselves out. And it seemed that was a fix for a while. If you can remember, there was a whole year that went by where things were okay until they started really getting scary again. And then Lehman was at the bottom, because Lehman was then the fourth of 4 remaining. But Bear Stearns, they had the lowest credit rating of any firm of theirs. And then when JP Morgan bought them up, all owners of Bear Stearns bonds then went from owning, A- credit to AAA credit. So their bonds all appreciated in value. They were all very taken care of, anyone that was exposed to Bear Stearns credit. And so now with Lehman happening, it wasn't even a remote possibility that bankruptcy was a question. It wasn't even talked about. I mean, I know that seems like hard to understand in retrospect, given everything that has happened, but at the time, nothing like that had ever happened. No large investment grade company had gone bankrupt, and nothing even close to the size of Lehman had gone bankrupt. Just to put that into perspective, the 2 largest bankruptcies before Lehman were Enron and WorldCom. And Lehman Brothers was 10 times larger than Enron and 7 times larger than WorldCom in terms of assets. So the possibility of Lehman going bankrupt was highly unlikely and not really even thought of as a plausible scenario.
Yeah, I mean, and what were the scenarios that were being thrown around within the firm?
So we thought, when you saw what happened with Bear Stearns, you thought, okay, that's a plausible scenario. Certainly, there was talk internally that we were going to get taken private by a private equity firm in a management buyout led by private equity, which was actually very exciting because we were all pretty loyal to the firm and thought, well, this is great. Then we're going to be partners of a private company. We'll grow back up. Everything will, is going to work out, and ultimately, with maybe whether if we go public again or whatnot, then everybody will do pretty well, and everybody bought in. So the most likely scenarios where we'd get bought out by one of the large investment banks, Bank of America was being thrown around, especially at the end. On that last weekend, the federal government said, we will broker a deal this weekend for Lehman Brothers. We are going to arrange a sale, and the thought was that it was either going to be a private equity firm or Bank of America.
Yeah. So over the weekend of September 13th, 2008, Lehman, Barclays, and Bank of America made a last-ditch effort to facilitate a takeover of Lehman. They were unfortunately unsuccessful, and Bank of America was instead buying Merrill Lynch. And on Monday, September 15th, Lehman declared bankruptcy, resulting in the stock plunging 93% from its previous close on September 12th. Wow, it was the largest bankruptcy ever. The firm put a 2-week lock on all client assets, and many of those assets would get tied up in the bankruptcy for years. So, Mike, what was that weekend and the following days like for you after Lehman declared bankruptcy?
It was absolutely nuts. It's funny because I can remember every single second of detail, and yet I can't. Everything's a blur at the same time. But I remember it was Sunday the 14th. We're watching the world markets on Bloomberg, and the news came up that federal government basically forces Lehman to file bankruptcy and brokers a deal for Bank of America to buy Merrill Lynch. And I remember watching with my wife and just looking at each other and not having any idea what was happening, because it was just so, there was actually a little bit of excitement for that weekend, because then after months and months of just being the cover story on CNBC and just, countdown to Lehman and what's going to happen, we were a little bit excited to get past that and see what the next chapter held, whether that was a broker deal with Bank of America or something else. But we were just excited to move on. When that happened, it was like the sky just dropped. I mean, here in just 5 years, I'd built up a really nice business that I was super proud of. I had, about 400 million under management. I had a partner with me and a team that I was building. But I hadn't, these aren't long-term clients. This is all clients I'd gotten in the 5 years I'd been there. And I just didn't, one, I wasn't all that experienced. And two, no one really had this experience. So I just said, I got to go into the office, and that was very unusual to go in on a Sunday, and, called my partner and said, yeah, I'll meet you there. And we got there, and everybody that in the office was there that day. And it was, what can you do? Gather clients' information. We didn't know what was going to happen. No one was answering the phone at corporate. Listen, you couldn't call New York to get any answers. You just didn't know what to do. And clients are starting to call, and you don't even know what to say to them. That's a super scary feeling, right? I mean, you're supposed to be in charge. It was incredibly scary and intimidating. And so you're just scrambling, right? Just get information, anything you can, but your mind is on, I have to take care of my clients. Like, everybody was in that mindset. We have to figure out what to do. So that week, it's that Sunday. And then, you're at Monday, and that's when you're really being held accountable and all the calls come in. So you're just going between fielding calls and saying, hey, look, we're just trying to figure it out. Hope you should be okay because the FDIC is taking over, so your assets should be all right. But we didn't really know. We didn't know what this would mean, and clients wanted to understand. Well, what about anything that has exposure to Lehman debt or anything like that? And we're saying, look, we're just going to try to find out. We're just going to find out. At the same time, you're calling headquarters, trying to figure out what's going on, and then also you're trying to set up interviews so you can go in and move somewhere, right?
Somewhere else. Yeah.
Essentially switch jobs so you could go to another firm and then take care of your clients there, because it wasn't talked about. Barclays ended up buying the assets, but that was several days later, and it wasn't being talked about. We just didn't know. We didn't feel like there was still going to be a firm to be there, most of us. So we're crossing each other on the street, walking back and forth between Morgan Stanley and Goldman Sachs and Credit Suisse and Deutsche Bank and JP Morgan, and just going in with basically a sheet that said what our trailing 12 was. And we're going in, and it was kind of like green pastures for them, even though they were all scrambling too, but they thought, wow, we have a chance to bring over all these assets without anyone left behind to try to keep them there. So it was a really interesting dynamic, right? Because everything else in the financial world had completely frozen. Nobody was hiring. No one even knew what to do, because the fallout was just starting to happen after the bankruptcy announced. I mean, every hour there was new information about how that tied to some institution or how that was affecting the whole global financial system that they didn't anticipate. On the hour, these news reports are dropping. So it was pandemonium.
Yeah, I mean, I wanted to, looking back, there were a lot of risks that surfaced during that time. And I wanted you, I know that there was one risk that came up for you and your clients that a lot of folks didn't see coming, didn't know about. What was that big risk that came up, and how did that impact your clients?
Well, so in terms of client assets, the FDIC kind of seized them, and no one really had access for a couple of weeks. And then when the scramble mode was over, it took a few days, for literally just a few days. I think on the 18th was my first day at UBS, and a bunch of our office went over there. But once the seizure stopped and clients could transfer, that's when you really realized what was tied up in the bankruptcy and what was not. It turned out about 30% maybe of my clients' assets were non-transferable. They were being tied up into the bankruptcy. And there were three ways basically that your assets could get tied up. And that was, one was, I think what you're alluding to is this rehypothecation. And that was a big word back then, and no one even knew what it meant until this happened. And then everyone knew. And so basically, if you had clients on margin, or if their assets were rehypothecated, which I'll explain in a second, or they held their cash assets in auction rate securities. And that's another big one that a lot of people don't know about, but that was a cash surrogate at the time. But it did have credit risk. Just it wasn't seen as credit risk because it was all AAA rated, insured stuff. But that got tied into bankruptcy too. So that's a big chunk of people's cash that they had in that. And if you hadn't gotten out of it yet, then it was tied up. So the big eye opener though, once this happened, and what really shocked clients and advisors, especially advisors at Lehman, was that any funds that we were placing clients into that used Lehman Brothers trading desk as the prime broker. And mind you, like most people didn't even know who the prime broker was. That was behind the scenes. It didn't really matter to the actual investments. It's just whoever the fund used to trade securities and to use margin and whatnot. So even really safe funds, use a prime broker. And what we realized is, as Lehman Brothers had a huge prime broker business. And when you're a prime broker, part of the arrangement is that you are, and these funds have subscription documents, and it says somewhere in the small print, essentially, that they're allowed to do this. The assets that you technically own in this fund, the prime broker can use as, they can use them for rehypothecation, which means they can essentially use them as collateral for other loans that they were taking. So your securities that you supposedly own can be used for collateral. So that was the big deal that tied everything into bankruptcy, because then someone else had claim to those assets. So you couldn't get them back right then because someone else had a claim to them. So that's scary. And, nothing like that had ever happened. And I think the scarier thing, which still probably is an implication today, that many advisors I've talked to since then still didn't realize that this was even a thing, But when you just open a basic brokerage account, or some investment account with an investment bank, there's an option on there. It's a box that says, do you want the ability to use margin? And, usually advisors would say like, yeah, if you ever just think that you might want to use that, you can just check it and you don't ever have to, and you're not going to get charged anything unless you want to use margin. But, you might need to really quickly make that decision. So it might be worth it. All you got to, it's just checking a box. No one realized that just by checking that box, it classified your account as a margin account. And as a margin account, they were allowed to rehypothecate those securities that were in that account. So that was another really big thing. And I still think today most people probably don't even know about this. So that was another big eye opener and a very scary thing that our clients learned, and our clients lost money because of this, and now fortunately I didn't have anyone on margin, but I certainly had clients in funds that used Lehman as a prime broker, and in auction rate securities. I had some of my own funds in auction rate securities that were tied up for, 5 years or whatever. So yeah, I think those were the really big issues that clients and advisors felt more than anything as a part of Lehman.
Yeah. And I know that you were telling me that, when you went over to UBS, you had some clients asking you, are my assets safe? And you felt like you couldn't guarantee that. And so what happened there? I think you had some clients walk out the door because of that, but how did that, make you feel? What happened with your clients over at UBS?
Yeah, that was hard. You talk about it as kind of an event that happened. Lehman goes bankrupt, but then you go to a new firm and you start from there. But the reality was that the sky was still falling, right?
Yeah.
One of the reasons we chose UBS, a bunch of us did, is because, Swiss backed, which the turmoil wasn't happening in Switzerland. They had already been in the news and it had some bad things happen, and they got out in front of it and resolved it. So we thought they were in pretty good shape. But when we get there, every day the market's still just tanking. And it's, if you remember, it wasn't until I think the end of the first quarter of 2009 where the market rebounded. So you still had a good 6 months of turmoil. And in that time, so much is happening. Rumors are flying around. Some bank's going to go under. You're going to sell off an asset. That was crazy. So, I was fortunate. I was one of the first people to get the majority of my clients' assets over, which was, I felt very humbled by, and that my clients would at least trust me that much, but also they wanted to get somewhere safe, I'm sure, as well. But then they asked me, and I didn't have a ton of clients. I had a lot of big clients, and they asked me, so, okay, we're settled now here, but I lost a lot at Lehman and a lot was tied up in the bankruptcy. I don't know what's going to happen with that. We're still shaky, remember, and news was bad. And they said, can you guarantee me that my money's safe at UBS? And my answer was, well, I can guarantee you that I will do everything I can and be fully transparent, and I will research everything to make sure it is, but I can't guarantee you that systematically everything will hold up and that something bad won't happen. I just can't do that in good conscience. I cannot do that. And yeah, I believe that. I was worried myself. There were rumors about UBS at the time. I was terrified. And so when the majority of my business said, we're just terrified, we're going to just take our money and liquidate everything and put it under our mattress or whatever, or keep it at like a local bank because they feel like proximity made it better, whatever the reasons were, rational or irrational. I didn't fight it because I felt like to fight it, I'd have had to mislead them from what I really believed. I just seen, like it felt like I stared death in the face with the whole Lehman thing. I think I told you, I was on my way actually to take a job at Morgan Stanley first. My partner and I were like, okay, we're going to do this. And we got up to walk across the street to accept the job, and we checked the ticker, and Morgan Stanley was down 35%. In addition to what they already were down for the year, 35% that day. And we thought, this is before TARP or anything, and we thought they might not be around tomorrow. Like they might go under. So how can we possibly walk over there and tell our clients we made the move. And then if it's not around in 24 hours, we're done. Like our business is through. So yeah, I mean, you call it skepticism or paranoia or what it was, but we all felt it. All of us at Lehman, we felt it big time. And so, yeah, so most of my business walked out the door, and I allowed it. I facilitated it. I didn't tell them to do it, but I said, look, I'm here for you, but I can't guarantee safety. So it was rough.
Yeah. Yeah. And just for those who don't know, the Troubled Asset Relief Program, TARP, was signed into law by President Bush in October 2008, and it allowed the government to buy preferred stock in 8 banks, including Bank of America Merrill Lynch, Bank of New York Mellon, Morgan Stanley, Wells Fargo, et cetera. I know that you were telling me, I know we're kind of skipping ahead here a little bit, but I want to address, how all of this affected you personally. And, I know that you were saying that kind of from 2008 to 2015, you felt, unfulfilled professionally, like you had no control or options in your career. And how did you sort of come back from that? And how did you get to the point where you're at today, where you are feeling fulfilled and successful and love what you're doing? Yeah, I know that's a big question.
Yeah, no, I no, I appreciate it. I mean, I guess it's hard to convey the emotions that went on with it. First of all, again, I was proud. I'd invented this business that wasn't, it's a little bit more common today, but what I did was I worked with entrepreneurs and business owners, and then I would help them sell their company by bringing in Lehman Brothers, or bringing in, whatever it was, or bringing in a trading desk, or whatever it was, kind of a problem solver up in advance. And then when they got that liquidity event, they would be more trusting of me. And I was, super, super proud of it. I didn't come from a wealthy home or anything, and a little bit of a middle child syndrome, maybe, to kind of, I was just proud that I'd created this business, and I was right at the beginning of kind of the main stretch of my career, right? So I think I was around 35 at the
Lehman
time.
really supported that, right?
They did. And again, in my particular office, especially, and there were only 12 of these offices around the world. So there was only 2 in the Western US, San Francisco and LA, but absolutely they supported it 100%, provided me the resources I needed, were very helpful. And I had established this, and it was just it was all supposed to be smooth sailing from there. Anything that, in the wealth management business, what's so great about it is you have clients, and they pay, you earn an annuity, right? Based a percentage of the assets you manage. So assuming you don't lose clients, you just build from there. Plus their assets grow as they succeed, and then you add clients. And so the hard part was done. Everything else was just really how far do you want to take it? Where do you want to go with this? And everything looked so bright. And then when most of my clients walked out the door a few months after moving over to UBS, I felt like I'd won the lottery. And what are the chances of winning the lottery twice, right? I mean,
Yeah.
it was a very scary feeling. And I thought, I was with my partner still, and we were like, look, we can do this again. And we tried to replicate the same thing at UBS, and it wasn't set up for it. It wasn't working. A lot of the people that had hired us and were excited about our business model in the first place had been turned over. And, won't get into all that, all the reasons, but it was almost impossible to grow the business with what we did and what we were passionate about. And, the way those deals work, we're in a kind of the golden handcuffs of a forgivable loan situation. So you, in a way, you're stuck there, and then stuck without being able to do what you need to do to succeed. It was a claustrophobic feeling. I mean, and I didn't see any way out, and I didn't see a lot of options. We kept trying. I mean, all along we kept trying, and it just wasn't the right situation. And it just wasn't going to work out. And it was, and then And then, after a few years and you think back about where you were and where things were going at a time, it was just very, very emotional, and hard. And you feel like you don't have any control. And you're
Yeah.
supposed to be in the prime of your career.
Hmm.
And, it changed personality. I became more cynical and definitely more skeptical. It helped me understand risk. So, which would hopefully help to serve me in any client service capacity going forward, because I understand that there's more than just market risk. There's all kinds of different risk that and especially the risks you don't even know about. But
Yeah.
I had to get I'd always been, got an MBA from Wharton, and I was really just excited and focused on having a big career. At the same time, I was growing a family. I had 4 sons, and personally, I was able to keep, myself okay, and from a mental standpoint, by really spending more time family. And I did a lot of coaching. I got really into
Mm.
coaching, and so that allowed me to spend time with the kids and everything. But it was always lingering there, like, at some point, this is going to take its tolls. And it did, more and more and more, up until, it was probably a good 6 or 7 years there, right in the, my late 30s and just into my early 40s. So I didn't know what I was going to do, and if financial advisors that are listening to this can understand, it's, once you choose that profession, it's your profession. It's not one that's real. There's no natural leap to anything else. And that's what I'd been doing since I finished business school. So I felt like, sure, I'd be capable of doing other things. It was, that's hard. It's a harder sell, right? To get
Yeah.
someone to believe in that. And I had a very focused little niche. Fortunately, it worked out. But, just to answer and I'll talk a little bit about that, but just to answer more specifically your question earlier, how it affected me, it's hard to convey, but I think one way to I guess put an example around it is, I tried to read Too Big to Fail. I tried to watch some of the movies and the specials that came out about it. I couldn't get 2 minutes in without
Yeah.
becoming, and I'm not a super overly just emotional person, but overwhelmed when anything would play, because you feel like you were wronged. You feel like, I mean, there's so many things that go into it. There's anger, there's sadness, there's just so much shame. There's just a ton of emotions that go into it, and I couldn't even watch a movie. Even that second Wall Street that came out, that had to be refilmed, several times because of what was going
Hmm.
on. They ended up having pretty much a parody of the whole Lehman situation in there. And I was watching that with my wife, and she went through this with me, and we were both like in tears during Wall Street too. Like, that's pretty embarrassing there, but it had that much emotion, and that was several years later. There are a lot of different kind of lanes I could take with that from an emotional perspective. But, ultimately it became time, times were a little rough, and I had to find a way to dig myself out. And so I was able to, I finally made the decision, to just leave my business. My partner held on to what we had, and he moved on to an RIA and went on the independent side, and was going to continue that. And I decided I would, just try to manage some clients on my own, on the kind of as a business brokerage side, right? So working with entrepreneurs and maybe helping them get liquidity at some point. Because I built
Hmm.
up some of these relationships for over 10 years.
Hmm.
And ultimately, I came across ECHELON Partners, which was right in my backyard. I called Dan Sievert, the founder and CEO, directly and said, "Hey, look, this is very interesting. You're an investment bank. You do M&A in the wealth management space." And, my whole business was running a wealth management business, but I helped entrepreneurs sell their companies. So I had a hybrid business technically. And this just marries the things that I know best. And we got lunch, and right away it was a clear match. And I joined, and kind of right before really this revolution in the wealth management space happened, this big consolidation. and a lot of attention and private equity money, M&A came here and ramped up for that, and then just ended up being in a position to really just take advantage of that and have an incredibly fulfilling job and career and being, Dan's number two. And so on the forefront of helping to develop how our firm shaped with this, I would say, evolution of the industry, and then doing what I love more than anything, which is working with entrepreneurs and business owners and putting myself in their shoes and treating them how I'd want to be treated and how I'd want, it's a very emotional thing to sell your company or to transition in that sort of a way and take liquidity for something you've built your whole life. So I just, I really enjoy being a part of that. And honestly, I do feel like it is kind of a little bit of a second win of the lottery. I'm so grateful for it every day that I can be doing something again that I love and have a career that I love. And, I'm 7.5 years into that now. But you never forget. The feelings are always there.
Yeah.
So my appreciation for it and my love for this particular industry, I think is genuine and rooted in some kind of a different history than a lot. It's certainly unique. So, I try to take those lessons and challenge and channel them for the positive now, but also at the same time, super appreciative because, for a long time was in a really kind of bad space.
Yeah. You know how bad it can be. Well, I'm looking forward to reading the book someday, if that ever comes to fruition. But if you're not familiar with ECHELON Partners and the work that Mike and Dan Sievert do there, they do great work in the industry, and you should definitely familiarize yourself with them. Well, I'm afraid we're just about out of time, but I'd like to thank my guest, Mike Wunderli, for being on the podcast and just opening up, Mike, and being so vulnerable about the story and about what you went through at Lehman. Thank you so much.
Oh, thank you, Diana. It's a pleasure. It helps to talk about it. Maybe, it reminds me some things for the book that I will never write, but would like to. But I really appreciate it. And again, I think you do really amazing work and you have some great guests, and I'm just honored and humbled to be one of them.
Well, thank you. I mean, I think what you've been through is very honorable in how you treated your clients, and we could all learn from that. But if you'd like to reach out to Mike, you'd like to touch base with him personally, you can reach him at mwunderli@echelon-partners.com. And if you yourself have a struggle, if you wish to share your experiences and help others in similar situations, please feel free to reach out to me at diana.britton@informa.com. I'd like to thank you for listening to The Healthy Advisor. If you've not subscribed to the podcast yet, please click the subscribe now button below. This is Diana Britton reminding you that where there's healing, there is hope. We'll see you next time. Thank you for listening to The Healthy Advisor, a podcast focused on advisors' personal well-being and healing. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of WealthManagement.com. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional advice. Always seek the advice of your healthcare provider with any questions you may have regarding your particular situation.